Now, everyone, can we start once again? Okay. So we'll start with AS23, accounting for investment in associate in CFS. Silent now. Accounting for investment in associate in consolidated financial statement. Okay. Now, we have understood parent company subsidiary. Now, if suppose any company has an associate, if any company has an associate, so that company need to also prepare CFS. Means, just try to understand. Suppose there is one parent company has a subsidiary. The parent company is preparing CFS as per AS21. When a investor has an associate, so this investor also need to prepare CFS, but as per AS23. AS23. Understood what I am saying? Similarly, if any investor has a joint venture, correct? So this investor also need to prepare CFS as per AS27. Here, CFS is prepared by one method which is known as line by line consolidation method. Means right now whatever we have done for parent subsidiary, that is done as per line by line consolidation method. But here the CFS is prepared by using equity method. We call it what? Equity method. That we need to understand what is the equity method. And here it is prepared by proportionate consolidation method. So that we need to understand what is proportionate consolidation method. However, from exam point of view, AS23 is more important than AS27. Means from my point of view, AS23 they may ask question against what AS27 is not. It can be also asked, but more importantly AS23. Therefore, I am doing first AS23. Now, what do you mean by an associate? An associate is an entity in which investor has significant influence. Means if any entity has a significant influence over another entity, so that another entity will become associate. Correct? So what do you mean by significant influence? Significant influence means power to participate in the financial and operating policy decision. Means they have a power to participate. Means they can participate in a decision making process, but their decision will not be final. It is as simple as in a family meeting, can you say the ultimate controlling power will be with your parent, but in your life meeting, suppose in your marriage meeting, etc., there will be some other person who will be involved. Your uncle, auntie, bua, tao, there are many persons. So they have a power to participate. They can influence your life. But who is controlling your life? Parent. Understood? Wife. You are married. So how you know? Without marriage, you have experience. Chalo, we are diverting. Therefore, we don't take any example of wife, right? You will not able to understand. Wife comes, entire life destroyed. चलो recorded अरे बाबा. चलो now. चलो ठीक है. Come to. Yeah. So power to participate means what? Significant influence means what? Power to participate in the financial and operating decision of the investee. Now this significant influence is presumed. Means there is some presumption taken. What is the presumption taken? That if any entity hold directly or indirectly, once again directly or indirectly, 20% more of the voting power of any investee, it is presumed that that entity is able to exercise significant influence. It is presumed that entity has significant influence unless it can be demonstrated clearly that they do not have significant influence. Means if question is silent, always will assume yes, they have significant influence. So what is the voting power? 20% or more than 20%. Similarly, if any entity is holding directly or indirectly less than 20%, it is presumed that entity does not have significant influence. So from exam point of view, this 20% will be the benchmark. 20% will be the benchmark, correct? Means if any entity is acquired 25% of another entity, so that another entity will become associate of the entity who has acquired, correct? So this presumption to you have understood, I think. Now let us come to equity method. How to apply that equity method? So one thing we have understood, if suppose A Limited has acquired 70% of equity shares of B Limited. So can you say A Limited will prepare separate financial statement as well as consolidated financial statement. So in separate financial statement, investment will come as per AS 13, and in CFS, can you say all asset, all liability of B Limited will come as per AS 21. This already we have understood. So when I am saying A Limited has B Limited and they have acquired 25%, so this B Limited now become associate. So in the SFS and in CFS, so in SFS of A Limited, investment will come as per AS 13, but in CFS this investment will come as per AS 23. Means just try to understand, when it is an associate, so we are not recognizing the assets and liability of B Limited. We only recognizing investment, but as per which method? Equity method, as prescribed under AS 23. So now we are understanding how to measure investment in CFS by using equity method. That is our entire discussion. Okay. So equity method, when to commence equity method? So can you say equity method will commence once the other party become associate? Means once the other entity become associate, that become the date when the associate is acquired. So on the date of acquisition we can say. Now application of equity method. So first we'll do calculation of goodwill or capital reserve. It is same to same as we have done for CFS, means for subsidiaries, same to same, correct? So here we write down cost price of investment, suppose 25%, correct? And we write down investment share in fair value of net asset, same thing, fair value of net asset 25%. So this will be goodwill or capital reserve, But what AS 23 says that this goodwill or capital will not be recognized. This will be only calculated and disclosed. Correct? So this will not be recognized. This will be only calculated and disclosed. So even though question is silent, we need to calculate it, but will not recognize it. Why will not recognize it? Let me explain you. Suppose the cost price of investment is 100 and the sharing fair value is 80. So goodwill is what? 20. Now this investment considers two parts. You can see 80 and 20. Means the investment represents 80% of net asset and 20% of goodwill. Means 80 net asset and 20 goodwill. It means investment is inclusive of what? Goodwill. So if investment is inclusive of goodwill, so there is no need to recognize goodwill separately, because investment will come in the balance sheet and that is including what? Goodwill. So it is already included in the carrying amount of investment, and therefore there is no need to recognize goodwill. Only will disclose that this investment include how much goodwill? 20. So we'll only disclose this investment include how much goodwill? 20. Understood this point? Correct. Now then we need to calculate value of investment as per equity method in CFS. Only you need to understand the 4 points from examination purpose. So this become cost price of investment, including goodwill or capital reserve. Correct? Including goodwill or capital reserve. In this, we'll first add investor share in the post acquisition profit or loss. So as simple as any post acquisition profit. In that, investor says suppose 25% to 25% of post acquisition profit or loss will be added or deducted. Can we do? Correct. Then any dividend received from associate will be deducted. Any dividend received from associate will be deducted. So any dividend received deducted. Any dividend received will be deducted. Understood? Correct. And any unrealized profit for downstream transaction. Till now this point has not been asked in exam. Correct. If asked, then that's, if suppose asked what to do, that I am explaining. So there are once again unrealized profit can be downstream, upstream. So if it is downstream transaction, then share in unrealized profit will be eliminated. Why? I will explain. So only these three adjustments you need to understand from examination point of view. They are not asking beyond this. They are not asking beyond this. Got this point? Correct. It means, can I say, when you purchase the investment, what will be journal entry in CFS? Investment account debit to bank. So on purchase of investment, the journal entry is investment account debit to cash or bank. Then any share in profit will be also added in investment. What journal entry will do? Investment account debit to sharing profit. Sharing profit from associate. So you can see, for recognizing the sharing profit, if it is profit, investment in associate to sharing profit from associate. And this will be transferred to PL of investor. PL of investor. And from that it will be transferred to consolidated retained earning. Consolidated, you can say consolidated PL better. Consolidated PL. Understood? So it will be transferred to consolidated PL. So there will be two effects. Investment will increase and the consolidated PL will also increase with the amount of sharing profit in post acquisition profit. Correct. Similarly, there is a loss, then reverse entry, sharing loss from associate to investment account, and this sharing loss will be transferred to PL, and from there it will go to consolidated PL. Got this point? Any dividend received or receivable. So any dividend received or receivable. So dividend received and receivable, it will be deducted from investment. So bank account debit to investment. Bank account debit to investment. What journal entry will do? Bank account debit to investment. Understood? So bank account debit to investment. So your investment reduce. Your investment will reduce. Got this point? Have you understood? Any doubt? Correct? No doubt. Okay? This also you have understood. Now for elimination of unrealized profit on unsold stock. So this point I need to explain. For elimination of unrealized profit, suppose there is one company A Limited which is acquired 40% shares of B Limited. Okay? Now suppose the goods is sold by A Limited to B Limited. Goods are sold by A Limited to B Limited. So let's say cost price is equal to 100, profit is equal to 10. So sale price become 110, and this will become the cost price of stock in B Limited 110. Have you understood? Now just try to understand. If I am saying in CFS, so this PL will come 10, but the stock will not come because we don't recognize assets and liability of associate in CFS. So this stock will not come. Are you able to understand? But instead of stock will, what will come? Investment will come. Investment will come. And investment is nothing but, can I say, investment nothing but it is 40% of net asset of associate or not. So when I am saying it is 40% investment, so investment represents 40% of net asset. 40% of net asset. Are you able to understand what I am saying? So investment, whatever we are recording in CFS, that represents 40% of net asset of associate. So can I say this include 40% of stock? Can I say this include 40% stock of A Limited? And stock include what? URP 10. So this include 40% of URP or not? This include 40% of URP. So can I say investment is overvalued by 40% of URP? That need to be eliminated. Therefore, we'll pass one journal entry. What journal entry with a PL account debit to investment? And we reduce 10 or 40% of 10. 40% of 10. So we reduce 40% of 10, and therefore investment will decrease. Investment will decrease. So what will be journal entry? Journal entry what? PL account debit to investment. PL account debit to investment. So whenever it's downstream is from investor to associate. So journal entry become what? PL account debit to PL account debit to investment. I hope you have understood this journal entry. PL means consolidated PL, you can say consolidated PL or retained earning account debit to investment. This journal entry have understood. And therefore, when I was saying this, so I said investor share in URP in which transaction? Downstream transaction, that will be also deducted. However, till now this point has not been given in any question of ICS study material, but I think can be asked. Similarly, if there is an upstream transaction, let me explain upstream transaction. So it will be reverse. Now suppose A Limited has invested 40% in B Limited. Now reverse, B Limited has sold goods to A Limited. So suppose cost price is 100, profit is equal to 10 and sale price is equal to 110. So this becomes stock of A Limited 110. Now in the CFS of A Limited there will be stock. Stock how much? 110. Correct now? Are you able to understand? Correct. And can I say this profit, this is the profit of B Limited. So this profit of B Limited will be recognized in CFS of A Limited. What journal entry will do? Investment account debit to share in profit. We'll pass this journal entry now. This journal entry, investment account debit to share in profit. बोलना है ऐसा ना? So if we record this journal entry, what will happen? We'll pass one journal entry, investment account debit to share in profit, and this share in profit will be transferred to PL of investor 10 into 40% into 40%. It means they will recognize 4 rupees profit and that will be transferred to PL of what? A Limited, 4 rupees. Are you able to understand? And this 4 rupees is included where in this stock. So we need to eliminate this. So what journal entry will do? Journal entry will what? This is only included here, na? 110 is inclusive of 10, but out of 10, only how much they have recognized? 4. So we can eliminate only 4. What journal entry will do? PL account debit to stock. PL account debit to stock. PL account debit to stock. Or we can say retained earning account, yeah, consolidated PL account debit to stock. So you can see what journal entry I have given. I have given sharing profit, means that is also transferred to what? PL only. So consolidated PL account debit inventory. Means only you need to remember, what you need to remember? Whenever downstream transaction, so journal entry is what? PL account debit to investment. Whenever it is upstream, then PL account debit to stock. Understood? Can you retain this much? Correct. If you have understood this much, okay. Then cancellation of intercompany debt, means it is quite possible that receivable of investor and payable of associate is intercompany balance. But can you cancel it? The question of cancellation will not arise. Why not arise? Because can you say assets and liability of associate is not recognized in the books of investor. The question of cancellation will not arise. So any intercompany debt will not be cancelled. Will not be cancelled. Only this much. If you have understood this much, last point I need to explain, then we can take any questions. Correct? Now carrying amount of investment. Carrying amount of investment. If there is some, suppose post acquisition loss. Post acquisition loss. So can you say if the sharing post acquisition loss may be more than the carrying amount of investment? So once again, investment, whether investment can become negative. So AS 23 said investment cannot become negative. It means we can recognize only to the extent of loss by which investment become nil. Let me explain this with one example. Example, A Limited purchased 30% of equity shares of B Limited at rupees 5 lakh. Okay. Equity share capital and retained earning of B Limited on that day is 5 lakh and 10 lakh. B Limited has reported a profit or loss during subsequent year. So you can see first year 10 lakh loss, second year 15 lakh loss, and third year 10 lakh profit. Calculate carrying amount of investment in CFS at each reporting date. Correct. So in this, what to do? Can I say first we need to calculate goodwill? First we'll calculate goodwill or capital reserve. Goodwill or capital reserve. What is the cost price of investment? For what percent is 30%? Na? 30%, 5 lakh. Then from this will minus fair value of net asset. to the extent 30%. How much share capital given? It is 5 lakh and reserve and surplus. So 5 lakh and reserve and surplus 10 lakh. Total become 15 lakh into what? 30%. It become 4 lakh. What is goodwill? Whether we'll pass any journal entry for this? No. So this goodwill is including in what? 5 lakh. This goodwill is including in 5 lakhs. Only this, only you to calculate. Only for calculation, no recognition, only disclosure. Okay. Then what we'll do, we'll find out value of investment as per equity method. As per equity method. What is the cost price of investment? Can you say including goodwill? Including goodwill of rupees 50,000. Amount is what? 5 lakh. So we should disclose that this is inclusive of goodwill how much? 5 lakh. Okay. Now first here there is a loss. We write down minus share in loss. Minus share in loss. What is the total loss? 10 lakh. But we'll take 10 lakh ka 30%. So we'll deduct what? 3 lakh. Right now that is positive. And therefore we recognize the entire loss. Entire loss will be recognized. Okay. So this become carrying amount as on year end. Okay. Again in the second year there is a loss. To write down share in loss. Now what is the loss? 15 lakh. Now 15 lakh into 30% how much? 4 lakh 50,000. But can you recognize 4 lakh 50,000? Means you can recognize only to the extent of 2 lakh. And how much can't be recognized? 2 lakh 50,000 can't be recognized. Understood? And value of investment become nil. Value of investment become nil. Understood? Are you able to understand? So in the second year, the value of investment become nil. Now there is a subsequent profit. So now we write down share in profit. Share in profit is how much? 10 lakh. 10 lakh 30%. But out of this 3 lakh, first we need to offset what? The loss which was not recognized earlier. So first we'll offset 2 lakh 50,000 and balance can be only recognized. Balance can be only recognized. Understood this part? Understood this part? And this become the value of investment as per equity method. As per equity method. Simple. Calculation is very easy. Calculation is very easy. Only up to this, if you have understood, question will be asked. This much. From exam point to the completed. Any question of ICS study matter now you can do. Chalega? So we'll take some questions. This you have understood? Yes, sir. So what is given? Check karenge. If the entity's share of loss of an associate equal or exceed the carrying amount of investment in the associate, entity discontinue recognizing its share of further losses and the carrying amount of investment will become nil. If the associate subsequent report profit, the entity resume recognizing its share of those profit only after its share of profit equal to the share of loss not recognized. Okay, chalo chalta hai. ठीक है. This okay, these all part now may be important from theory. Exemption from equity method. When equity method is exempted, can be asked in multiple choice question. So this you can read by own. This continuation of use of equity method, exemption from equity method. These are can be asked in multiple choice question. Ki when to discontinue equity method. So you can read by own. Okay, chalo. Let us take some questions. Chalo. First. A Limited acquired 45% of B Limited share on 1st April 2001. The price paid was 15 lakh. Following are the extract of balance sheet as on 1st April 2001. Paid up equity share capital, securities premium, reserve and surplus. So this become total net asset. B Limited has reported net profit of 3 lakh and paid dividend of 1 lakh for the year ended. Calculate the amount at which investment in B Limited should be shown in the consolidated balance sheet as on 31st March 2002. So first we will calculate goodwill or capital reserve. So calculate. The first calculation of goodwill or capital reserve. What is the cost price of investment? How much? 15 lakh. For how much percentage? For 45%. Then from this we'll deduct net asset to the extent of 45% only. So net asset will be total of these three is how much? So 16 lakh ka 45%. 7 lakh 20,000. So what is goodwill? 8 lakh 80,000 is goodwill. Okay. First calculate goodwill. What? 16 lakh into? Achha, this is 7 lakh 80,000. Who is saying 8 lakh 80,000? Who said? Use calculator. Huh? Oi. Oi, Baba. 15 lakh. You have better there only. Chalo. Understood? Correct. Now this two event is now we'll find out value of investment. Value of investment to what we write down? Value of investment. So what is the cost price including goodwill? How much? 7 lakh 80,000. What is the cost price? 15 lakh. Understood this way of presentation? Now in this first we'll add share in profit plus share in profit how much? What is the profit given? 3 lakh. 3 lakh ka 45%. So 1,35,000. Then minus dividend received. Dividend received. So how much dividend paid? So 1 lakh ka 45%. So 1 lakh ka 45%, 45,000. So this is the value of investment as per equity method. How much? How much? 16 lakh? No. 15 lakh 90,000 is the answer. 15 lakh 90,000 is the answer. Super easy. 5 marks question, super easy. 2 marks MCQs also super easy. Okay? Okay, sir. Okay. Chale. You can see they have also shown. But their way of presentation is something different. You can also present it in this way. How they are presenting? Listen. Means of course you need to follow ICA solution. So let us follow ICA solution. This two you have understood. 7,80,000 goodwill. Now how they are presenting? Ki net asset is what? 7 means net asset is how much? 7,20,000. Goodwill is what? 7 lakh. This become the cost price of investment. Do you also disclose in this way in exam? Ki share of net asset is 7,20,000. Add goodwill 7,80,000. So cost price of investment including goodwill how much? 15 lakh. Then add profit during the year less dividend itna. This is the carrying amount of investment as per equity method. Okay. So you can do in this way. Means you can follow ICI solution. Okay. This is one more good question. Let me take that good question. Question 3. Bright Limited acquired 30% of East India share for 2 lakh on 1st June 2001. On 1st June 2001. On 1st June 2001. By such an acquisition, Bright can exercise significant influence over East India Limited. During the financial year ending 31st March 2001, East India earned a profit of 80,000 and declared a dividend of 50,000 on 12/8/2001. Oh my God. East India reported an earning of 3 lakh for the financial year ending 31st March 2002, assumed profit to accrue evenly and declared dividend of 6,000 on 12 June 2002. Calculate carrying amount of investment in separate financial statement as on 31st March 2002. Consolidated financial statement as on 31st March 2002. What will be the carrying amount as on 30th June in CFS? Question understood? Now, this question, if you read, you will not be able to understand. Draw timeline. Let us draw timeline. So, question number 3, what they have given? When they have acquired? On 1st June, na? 1st June 2000. So, 1st June 2001, they have acquired how much? 30% at 2 lakh. Correct? Okay, this you have understood. Now they have given, during the financial ended 31st March 2001, East India earned a profit of 80,000. So 31st March 2001. So this is 31st March 2001. It means they have given a profit of previous year. So during this previous year how much they have earned? 80,000. This is the net profit of previous year, not at all relevant. This information is not at all relevant. Bakwas information. Understood? I said, now, if you will not draw, you will be confused. Correct. And then they have declared dividend of how much? 50,000 on 12th August. So 12th August will be somewhere here. 12th August 2001. They have declared final dividend of how much? 50,000. Understood? So this is our current year. This is our current year. Got this fine. Then they have given during the current year they have reported a profit of 3 lakh. So for 31st March 2002. So this is 31st March 2002. How much is the net profit of this year? How much? 3 lakh is the net profit of this year. 3 lakh is the net profit of this year. Correct. Now just try to understand. Whenever we say profit earned. So this profit earned is, just try to language. During the current year they have earned a profit of this much. So my question to you is, this is profit after dividend or profit before dividend? One second. If I say during the year profit earned, this is profit after dividend, profit before dividend? Huh? No, it is profit before dividend. Profit before dividend. Because profit earned means from SOPL, and dividend is not deducted from SOPL, na? Dividend is deducted from surplus in reserve and surplus. Correct now? So whenever we say profit earned, so it is before dividend. So can this 3 lakh is before dividend? 3 lakh is before dividend. Are you able to understand? Correct. Now this 3 lakh is earned for 12 months, but this is pre-acquisition period and this is post-acquisition period. So how much pre-month and how much post-month? How much pre-month? 2 months and 10 months. So can you allocate 3 lakh in 2 is to 10? $50,000 is pre and 2,50,000 is post. Understood? This you have understood? Correct. Now what they have given? Dividend declared on 12 June 2002. So 12 June 2002 will be next year. So 12 June 2002, how much dividend declared? 6,000. This is the entire information. Now, since the information about equity, share capital, reserve and surplus is not given, so can I say we can't calculate goodwill? Ignore goodwill calculation. Because we can't calculate goodwill because they have not given the information of that. They have not given the information of that. Understood? Okay. So we'll directly find out the cost price of investment. They have asked cost price of investment as per in SFS and then CFS. So first find out in SFS. But the cost price of investment is equal to how much? 2 lakh. Correct. My question to this 50,000 whatever is paid. So how much received? 30% received. So 50,000 ka 30% how much? But this is pre-acquisition or post-acquisition dividend? Pre-acquisition. So as per AS 13 deduct from cost price of investment. So minus pre-acquisition dividend. How much? 15,000. So as per AS 13, the carrying amount become 1 lakh 85,000. This is the first answer. ठीक है, चलेगा? Now we'll do in CFS. In CFS, so what is cost price of investment? No, 2 lakh. 2 lakh, correct. Then in this we'll add share in profit, but बताओ which profit, pre, post or total? Say post acquisition profit, post. So share in profit, so post acquisition profit already we calculated how much? 2,50,000 का 30%, how much? So 75,000 will be added, and minus dividend received. यहाँ पर भी dividend received minus deducted ना, so dividend received will be deducted. How much dividend received? 15,000. So minus 15,000. This becomes the carrying amount in CFS. 2,60,000 is the carrying amount. Understood? But this is as on which date? As on 31st March 2002. 31st March 2002. Understood? I hope you are understanding. Correct. Now again they ask in CFS, what is the carrying amount as on 30th June? Means as on this date they are asking. So again dividend received. So in CFS, any dividend received, whether pre, post, that will be deducted. In CFS, any dividend received will be deducted. But in SFS, only pre-acquisition dividend is deducted. This is the difference. Difference you understood? Correct. So can you see, we can start with this carrying amount. So what is the carrying amount? 2,60,000. Again dividend how much received minus dividend received how much? 60,000 ka 30%. How much? So what is the carrying amount? 2,42,000. 2,42,000. Understood? Correct. Got this point? Can we move? One more question I will do. Then I will take your question. Understood? You have transferred me, na? What is your number? Last में 47. So one question requested, so I'll do that question also. Chalo. Now one more question. A Limited acquired 40% of shares in B Limited on 1st April 2001 for rupees 10 lakh. On the date, B Limited had 1 lakh equity shares of rupees 10 each and accumulated profit 2 lakh. So you can find out goodwill. So goodwill, can you calculate goodwill fast? Calculate goodwill. How much goodwill? This much time. 5,20,000 is goodwill. Am I getting 5,20,000? So 5,20,000 you have got, but you will not recognize, you will only disclose. Okay, sir? Then after that, during the year, first year, B Limited suffered a loss of 10 lakh. Second year, 12 lakh 50. And third year, again loss of 5 lakh. So similar question we have done, but I will just show you how they are presenting. So how ICI is doing solution, that only you need to follow in exam. Okay? So 5,20,000 you have calculate goodwill. It means, can you say, as on the date of acquisition, 1st April 2001, because they have asked extract of consolidated balance sheet, means I will disclose the investment in balance sheet. How you will disclose investment in balance sheet? So what they are saying, investment in associate as per AS 23 What is the share in net asset? So share in net asset will be 4,80,000 plus goodwill how much? 5,20,000. Total become the cost price of investment. Understood? Understood? Now we'll find out carrying amount of investment at the end of the first year. At the end of the first year. So what was the share in net asset? 4,80,000. Then what was the goodwill? 5,20,000. What is the cost price of investment? 10 lakh. And what was the loss? 10 lakh. 10 lakh of 40%? 4 lakh. So minus will do what? 4 lakh. So carrying amount become what? 6 lakh. 6 lakh. Now what they are saying means I am not happy with the solution. What they are saying, okay, out of this 6 lakh, 5,20,000 will be goodwill. And balance will be how much? 80,000 will be share in net asset. As per there. So we'll also follow that. Means 5,20,000 will be goodwill. And 4,80,000 reduced to what? 80,000. Understood what I am saying? No. Bakwas not. Marks. Marks na. I am also solving because marks is important. Marks is very important. We need to follow ICA solution. ICA solution we need to follow sometime. So a teacher need to think that you are giving exam, so you need to follow ICA solution. Can I give you my follow? No. Therefore, I said in consolidation statement of net asset is not prepared by ICI. Correct now, but that will make your solution easy. And balance everything is as per ICI only. Correct now, everything is as per ICI. Each total will come as per ICI only. But I have designed statement of net asset because it will make the solution easy. Okay? So in this what they have said, check karo, 4,80,000 minus 4 lakh loss they have deducted from where? Net asset. It become 80,000 and add goodwill, it becomes 6 lakh. This is the presentation. Presentation understood? Then next year again there is a loss of how much? 12,50,000. 12,50,000. So we'll start from 6 lakh, carrying amount is 6 lakh. Now 12,50,000 of 40% how much? 5 lakh. So it become 1 lakh. It become 1 lakh. Understood? So now it become carrying amount 1 lakh. So how they are disclosing? But I am not happy with the solution. I am not happy. Initially what was the net asset? 4,80,000. Correct. Now what was the loss in the first year? 4 lakh. What is loss in the second year? 5 lakh. Total loss is what? 9 lakh. So 9 lakh is the share of loss. So net asset become negative how much? 4,20,000. What is the goodwill? 5,20,000. 4,20,000 minus 4,20,000 and plus 5,20,000. How much? 1 lakh. This is matching. Presentation, are you able to understand? It's totally bakwas. But the same question come, you do in this way. This question will be 6 marks question if they ask. Understood? Correct. Now last year again there is a loss of how much? 5 lakh. Again there is a loss of 5 lakh. So can you see the carrying amount is 1 lakh? Now 5 lakh of 40% how much? 2 lakh. But we can recognize loss only to the extent of 1 lakh. So 1 lakh and become nil. Now in the balance they are writing investment is nil. Now they are not writing that way. Why? Chalo theek hai. But we'll follow ICA solution. Can it follow this in exam? Not it asked, can be asked. Can be asked. Okay. Associated this much only. They will not go beyond this. They will not go beyond this. If they are going, that is out of book question. Okay. Now, one question which was asked in exam. If you have understood this much, so you can do it by your own. Let me, sometime in a different type of question, apply your common sense. Don't panic. Don't panic. What was the question number? Your question number? I'm asking him, you are saying. Question number 4. Chalo, everyone will do. Suppose this question came in your exam. So everyone will do. I will not do. Okay. Let's see how many of you are attempting and how many of you are doing correct. From my point of view, most of you will do correct. AC बंद करना रही. AC. चल. Question 5. Question 5. If you want to draw timeline, draw timeline. Try to understand question by your own. I will not explain. I will just read. On 1st Feb 2024, it is a exam question of which year? September 24. Question number 5 we are doing. On 1st Feb 2024, Best Limited acquired 80% equity shares of Cool. Cool become subsidiary for 14,80,000. First point you understood. On 31st March 2024, think about date. Best Limited also acquired 25% of shares of Good. Good become associate. The following are the balance extracted from the books of Best, Cool and Good. This is extract of financial statement. Best, Cool, Good. Equity share capital, okay. Securities premium, okay. 9% debenture, okay. General reserve, okay. PL account, okay. अरे read करना. Investment, PP, current asset, trade payable, including bill payable. Sales and other income, raw material consumed, wages and salary, production expense. These are the SOPL item. Additional information. The PL account of Cool Limited. Cool is what? Showed a credit balance of 30,000 on 1st April. This is the opening balance given. General is the balance is brought forward from previous year. It means closing balance and opening balance are same. For general is the both are same. On 31st March 2024, all the bills payable in Cool Limited balance sheet were acceptance in favor of Best Limited. However, on the date, Best Limited held only 3 lakh of these acceptance in hand, the rest having been endorsed in favor of trade. But how much will cancel? Only 3 lakh will be cancelled because balance has been endorsed. So only 3 lakh will be cancelled from both the party. Best Limited purchased good costing rupees 5 lakh from Cool Limited on 1st June 2023 at a price of 6,50,000. The entire good remained unsold with Best Limited at the end of financial year. But this is transaction 1st June. This is transaction during pre-acquisition period or post-acquisition period? Pre-acquisition period. So I will say this point is bakwas because unrealized profit can be eliminated for the transaction which occur after acquisition. Post, if you remember, I said it will be deducted from post-acquisition profit. So this is actually bakwas information. So any transaction which has been done before acquisition, that time so there was no relationship only. That time so there was no relationship now. So this is totally bakwas information. Understood? Are you able to understand? One, this point could be a point which you have not understood. Could be, but now you have understood. Okay. Best Limited is preparing CFS for the year ended 31st March 2024. Okay. Have you drawn the timeline? Now whatever I will ask, you will do it by your own. Okay. You have drawn a timeline? Chalo. Now you need to find out, means they have not asked balance sheet, they have asked some question. They have asked trade payable consolidated, means how much trade payable will come in the balance sheet. Bata. How much trade payable? Whether this will come 3,80,000? Bolo yes or no? Whether 4,10,000 will come? Whether 25,000 will come? No. Kata lagao. And there is one intercompany cancellation. So how much will be cancelled? 3 lakh. Cancel karo. So this plus this minus 3 lakh, how much? 4,90,000. You got 2 marks. 2 marks you got? 2 marks you got? Are bolna re? Not got. 2 marks you got ना? ठीक है. Second, current asset consolidated. बताओ, current asset में आते हैं. Current asset is where? Whether 9,65,000 will come, whether 5,60,000 will come, whether 2,25,000 will come. No. And current asset will include BR also. So how much will be cancelled? 3 lakh will be cancelled. What is the answer? 1 lakh 20, 1 lakh 12 lakh. 9,65,000 plus 5,60,000 minus 3 lakh. How much? So you are saying 1 lakh. 12,25,000. 2 marks you got. Please. For you, though, I am doing this question. You are only talking. ठीक है. तो बताओ, 4 marks you got. Out of 14, 4 marks you got. Now you should be happy or you should cry. Happy na. Happy. But normally, देखो, this is a different type of question. Normally, what you see? अरे ये क्या है? Oh. So different type of question is easy. You need to read the question. You should proceed. Go and have faith on your ability. Have faith on yourself. Till you have faith on yourself, no one will have faith on you. Understand what I am saying? Are you getting what I am saying? Till you have faith on yourself, nobody will have faith on you. So you should first focus on yourself, your ability. Yes, I am doing correct, even though you are wrong. Yes, I am the best, even though you are not best. Yes, I can do it, even you can't do it. Always say yes. Then only you will proceed. Okay? Now next point. Am I? Though of course you can do. Am I? Minority interest. Minority interest. For that, can you say you need to prepare one AOP, working note? So if I am preparing AOP, what is given? They have given securities premium, they have given general reserve, and they have given PL account. You write down securities premium, general reserve, and PL account. First we write down closing balance. Closing balance, how much given? 2,20,000, 84, 270. 2,20,000, 84,000, 2,70,000. Then add an opening balance. Opening balance of PL is given how much? 30,000. Correct now? General reserve, it is same, 84,000. And for other reserve, I said if nothing is given, we'll assume opening balance and closing balance are same. That is general reserve. So this will be also 2,20,000. So this will become nil. This will become how much? 2,70,000 minus 2,40,000. But what is the pre-month and post-month? It was acquired on which date? On 1st Feb. So how much pre, how much post? 10 months. So this will be allocated in 10 month and 2 months. So 10 month is how much? 10 month is 2 lakh. And 2 month is what? 40,000. So 40,000 is this. Understood? In this pre, we'll also add opening balance. So what is the total opening balance? Opening balance is what? 220 plus 80 plus 30. 3,34,000. So what is the total? 5,34,000. This is the analysis of profit you got. Let us prepare Sona. That working note you will do na. Okay. So Sona, date of acquisition, date of consolidation, and post. For the equity share capital, how much? Equity said 20 lakh, 20 lakh. Return 20 lakh and 20 lakh. And reserve and surplus, you write down 5 lakh, 34,000 and 40,000. So what is the date of acquisition total? 25 lakh, 34,000 and 40,000. Can you allocate this in which ratio? 80:20 allocate. 20 lakh, 20,000, 200, right? 20 lakh, 20,200 and 20%, 12 lakh, 5 lakh, 6,800. This also allocate 80 is to 20. What happened? This is wrong. 25 lakh, 30,000. Sorry. 20, what is that? 25 lakh, 34,000 into 80%. It is 20 lakh, 27 na? 27 minus. This is 5 lakh, 6,800. Correct. Now 40,000, 80% how much? 32,000 and 20%, 8,000. So you only say what is MI? How much MI? Working note I have done. MI you did. So 5 lakh 6,800 plus 8,000. How much? 5 lakh 14,800. Low. 2 marks you got. Whatever. Easy now. Easy. Understood? Easy. Exam pressure. Why? Your paper, your exam paper will be always difficult. Other exam paper will be easy. That is only exam. C exam is this. Means it is when this question came in exam, my situation low gaya. I understood no student will be able to do it. Why? Because I know the exam situation. It is very simple, but different type of question you will not attempt only. You will proceed. So I will say try. If you are not able to do, then go to some other questions. So I see also one that you don't try. Therefore, they give sometime different. They will give sometime but unexpected things. So only you need to control your emotions. That only I am saying. Now you can do all points by your own. It is super easy question. Can you do it by your own? Can you move? Chalega? Yes, sir. Done. So AS23 is completed from my point of view.